So I move on. So first, there's a lot of talks about thought leadership. And thought leadership means that someone has his own thoughts, not other men's thoughts or women's thoughts, own thoughts. And have your own thoughts, then you are a thought leader. And I think you are a thought leader if you have written the book and people have read it, because that's something that is crucial.
I wrote the book, but I'm not sure how many people read it.
I've read it, and some of my colleagues read it. We wrote about it, and probably they have read the interview about the book in our magazine. So but without further ado, I would like to introduce Jonathon Karelse. He is author of the book History of the Future, and he knows about S&OP, and the floor is yours.
Thanks very much. Thanks for the kind introduction, Martijn, and thanks for the two of you who generously raised your hands saying you read my book. Humans are, by their nature, aspirational, but lazy. We want to be someplace better, but we don't love the idea of having to work particularly hard to get there. And it's why the idea of magic pills or silver bullets really appeals to us. And the retrospective that Martijn gave us was a great example of that. As supply chain practitioners, we've gone through phases of people pitching the latest, greatest idea, the latest magic bullet that's going to solve, in an instant, all of our supply chain woes. There was big data. I mean, big data still exists, but big data was the thing that somehow was going to unlock all the mysteries of supply chain for us 10 years ago. There was, for a brief moment, blockchain, a solution still looking for a problem to solve. S&OP became IBP. I'm happy to have the argument about why they're the same with any of you offline afterwards, not now. I made the mistake last year at the conference of inviting active audience discussion, and about 30 seconds into my presentation, I got some. And I'm not going to do that this time. I've only got 10 minutes. And at conferences like this, you're going to hear from a lot of folks, and you will indeed later this morning, who are offering you solutions to your problems. And those solutions are important. Technology is a necessary component of supply chain evolution, especially at scale. Solutions providers can add value, but there's been so much talk about how much they can do for you with so little effort that I think the discussion you're going to hear this morning and this afternoon is particularly valuable. The experiences from real-life practitioners like Nicole and Danny, who will talk about where their companies are at in real life in S&OP practice. Not what's theoretically possible, not what's aspirationally possible, but what you can expect in your organization as the real hurdles to getting to S&OP maturity. And I think what excites me about that is because it's focused on actual value. So in the 6 or less minutes that I have left, what I'd like to leave you with is a very, very brief introduction of where I think some of our focus on forecasting in general has been misguided. One of the overriding themes of the book that 3 of you have read that I wrote was not on forecasting metrics, KPIs, bias, accuracy, forecast value add. These are important things. These are diagnostic metrics. But these aren't the reason that forecasting is important. And I think my perspective is a little bit different than a lot of supply chain professionals because I came to supply chain from kind of an unconventional route. My background was econometrics and then law, and I was a finance professional before I sort of got thrown into supply chain to pay my company back for sponsoring a very expensive MBA. And because they sponsored it, they got to choose the subject matter area, and because at the time we were experiencing perennial supply issues, they said, you're going to study supply chain management as a course concentration, thinking that would solve all the problems. So my focus on supply chain has never been in and of itself. It's been as supply chain as an enabler to financial objectives. And that's the approach that me and my team take in all our engagements. Supply chain excellence is a lever at the disposal of the organization to enable financial outcomes. So what I'd like to talk about in now 4 minutes or less is understanding the financial impact of forecasting. Everyone has seen a graph like this. What happens when you over-forecast inventory? Why is that bad? Takes up space, costs you money. What happens when you under-forecast? You miss sales. Why is that bad? Missed revenue, degradation of supply reputation, and that's expensive to fix. But at the end of the day, this is the tip of the iceberg in terms of the financial impact of forecasting, and more importantly, why we forecast. We don't forecast to create accurate forecasts. We don't forecast so that we can come to conferences and brag about the fact that by deploying this technology, we saw a 3% uptick in forecast accuracy. We forecast to optimize the balance between meeting customer expectations and financial obligations and expectations to shareholders. At the end of the day, we forecast to help us operate more profitably. And that's an important distinction. I was at a conference last month, and someone in the audience was asking one of the panelists, that the panelist worked for a distributor who supplied safety equipment. And he was talking about how difficult it was to forecast because basically demand for their products is based almost entirely on disasters. So they don't like to brag it, but they're very happy when a flood happens because that's when they see sales for particular products, or a fire, or a tornado. And these things are relatively difficult to predict. And someone in the audience said, hey, I've seen this new technology that they're deploying in California where they can send up these fleets of drones and go over the landscape, and basically by using AI, because AI solves everything today, they can determine where the next fire is going to break out. So would you think of deploying technology like this so you can predict what markets are going to need your fire recovery products? And this guy was quite excited about it. But what I know about the guy that was on the panel is he's running an $80 million business with a portfolio of about 11,000 SKUs, so it's an extremely long-tail portfolio. And the amount of margin, it's not a public company, so I'm not going to say, but it's not substantial. And herein lies the important distinction between driving for forecast accuracy versus financial impact. It's true that he could probably try to acquire that technology and deploy drones and predict where fires would break out, and it's possible he could improve the forecast accuracy on some of these long-tail items. But in an $80 million business, to deploy a $10 million technology to improve your forecast by, let's say, 20%, the corollary impact on your P&L is not only going to be negligible, it's certainly going to be less than the cost of deploying that technology. Understanding what the impact of your forecast accuracy is on your finance is key. If you haven't begun there, then looking at new technologies or solutions to deploy, frankly, is bad business. You don't know what the potential upside is if you don't know what your bad forecast is costing you. So I have been cautioned by the powers that be not to get too mathy, so I'm not going to. You can see this afterwards if you'd like. The point here is, you've probably seen, if you're a demand planning geek like me, online, heated debates about what's the most appropriate error metric. I'm not going to go there. One of these I hate, one of these I like better. I won't say which. I don't care what metric you use. I don't judge you. The point is, have an error metric, deploy it consistently, and make sure everyone across the organization knows why you've chosen that metric and how it's being deployed. That's the start point. The next point is to understand at the highest level what happens when you're long on stock and what happens when you're short on stock. And then add up the cost of those overages and underages and divide by the error metric on that SKU. Now, before anyone puts up their hand and says, well, there's all kinds of other costs you haven't taken into consideration here, I know. There are people who have literally written PhD theses on getting into the minute detail of the financial impact of forecasting. That's not the point here. The point is to understand directionally what is the impact of being wrong on a SKU-by-SKU basis. Why? So you can benchmark what the upside is. Because what that will give you is a picture like this. If your average error is 45% on this SKU, and when you're long, the carrying cost over time is $100,000, and when you're wrong on the underside, you're missing $75,000 in revenue, you add up the errors, you divide by the error metric, and you can take a look at what the impact is by SKU, by month, which means you can also forecast the upside. This is really important because if you're looking at deploying a multi-million-dollar solution or engaging a very expensive team to help you fix your forecast accuracy, you want a clear line of sight to what the ROI is. I've left a cheat sheet here that will show you many other interconnectedness between various operational levers and ultimately what matters, which is the financial impact. Final thought before I turn it over to the practitioners who are going to share their stories. This harmless-looking gentleman on the top right is actually a towering figure of statistical excellence from the 20th century. His name is George Box. And for those of you who are in the demand planning space, you'll recognize his name as one half of the Box-Jenkins algorithm. His partner, Gwilym Jenkins, also looked equally avuncular. One of the things that he said, which a lot of demand planners still cling to in their daily life, is all models are wrong, but some models are useful. Demand planners sort of reinterpret this to say the forecast is always wrong. And to them, that means basically, don't get upset when my forecast is wrong. It's always wrong, stupid. But what they forget is the second half of what George Box said. He said, all models are wrong, so aim for parsimony in model selection. Or for those of you unfamiliar with that 18th century word, simplicity. You're going to be wrong no matter how complicated or simple a model you deploy. So if you're deploying a complicated model in the hope that you're going to be much more right, you're probably going to be disappointed. And more to the point, if the cost in time and investment of deploying an expensive model does not outweigh what the corollary impact of that improvement is, it was bad business. The second thing he said was, because all models are wrong, don't sweat the most-sized errors when there's tigers around. And I've seen this time and time again. Organizations who are incapable of forecasting at better than 50% what their needs are for the next month, who are super interested in deploying AI technologies to fine-tune forecasts out at a horizon of 12 months. You've got tigers waiting at the door. You need to deal with those. The mice will always be there. So the focus ultimately in demand planning needs to be on what does the result of these impacts in forecasting have on my P&L? What does this do to my EBITDA? What does this do to my cash conversion cycle? What does this do to my return on invested capital because of what I'm doing with inventory? And this is the big difference between the aspirational focus of supply chain, the metrics that are nice, and the practical implication, which is what's in it really for me? What does this mean in real life? So with no further ado, I'd like to introduce Danny van der Ster from ASSA ABLOY, who's going to talk to us now a bit about practical implications of the S&OP journey.
Thank you very much. So just to set the scene, talking a little bit about what ASSA ABLOY is. For you that don't know us, if you are Dutch, you probably know us from brands like Nemef and Lips, but that's all been acquired. So the larger group is called ASSA ABLOY. We operate in more than 70 countries. We have 52,000 employees, and we have a revenue of 11.4 billion. So a true global company, and I will explain a little bit more why this matters in the supply chain and especially the S&OP setup. So how did we get to this size? And this is actually where it starts to matter. So there was a Swedish gentleman and a Finnish gentleman. They came together. They made ASSA ABLOY. One had a company called ASSA, the other had a company called ABLOY, both inventors in the locking industry. Then this journey started of acquisitions. So we were founded, and then during the years we acquired at this moment more than 300 companies, which means 1 to 1.5 companies every month. If you set up an S&OP, in our case, we need to tailor our processes for that, because some of the companies are really mature, the other ones are very low. One will operate with SAP, the other will operate with Excel. So the way we implement S&OP needs to be tweaked to cater for this. So for example, we are creating this data lake that makes sure that we don't have to change the ERP to our common platform. No, we will deploy the S&OP tool by using the data lake in the middle. So we can go faster, more agile, more resilient. So for me, I once had a dream that was called the blueprint. I've totally left that aside. No blueprinting anymore. We will go for a very agile approach, sprint-based, but also my team of excellence people, one of us in the room, Anke, which if you want to go in real detail, please talk to Anke. It's really tweaking the S&OP process for that specific circumstance. So that is really important to take with you. There is no one-size-fits-all. It's really impossible. So if we start deploying the acquisitions, we go in, we look what they do well, and we try to focus. Is demand planning the issue? Is supply planning the issue? Is actually inventory optimization the issue? Because of course, we acquire these companies out of our own cash flow. So cash is king. So if the inventory is a big problem, we focus first on making the inventory more healthy before we deploy a full-fledged S&OP process. So we really look where it hurts and where we can add value as the excellence people of the company. Of course, it's still important. We are truly global. So we want to implement something that also works for the group. So that I can see, hey, how is my inventory in the US versus Asia? Can I switch it around? All those questions matter as well. But when you deploy S&OP, it's really important that you look to the specificities of your organization. Then, what are we actually experts in? To tell a little bit of what we do, we provide access, or what we say, safe access. That can be a lock, a simple lock. It can be a door. It can be an automated door. But it can also be a passport to get access to a country. But we provide safe access. But if I then look at the S&OP cycle related to that, segmentation is really of the essence. So we need to segment our S&OP process to cater for all these different type of customers and different type of product groups. So that is the message that I want to give. Make sure you clearly understand your segmentation. Make sure you clearly understand what your value deliverables are from the S&OP. And then you focus on that part of the journey. So that is really, for us, an essential part of the S&OP. Truly understand our offer, and especially also related to the market. Because if we then look at the market, we are a global company, but we are truly uniquely local. So for me in the S&OP designing process, I need to understand what the demand profile in the UK is. What type of companies do we have there? What type of customers do we have there? And then we tailor the S&OP to truly reflect that specific market. While, for example, with the demand dropping in the building industry lately, what we see is the UK is like a pre-alert for us. Because the UK, actually, the demand drops faster. Sweden comes way later, stays a long time stable, but then they adjust way more rapidly. So there are trends that we actually can use in the S&OP process from the total picture, but again, we need to tweak it to really represent the local stuff. So if I go a little bit more in depth into the segmentation of our supply chain, if I take it on a really high level, we have two supply chains. One supply chain is really for what we call configured goods. And configured goods means, and that's more a European-based supply chain, I would say. We configure or we produce in Eastern Europe, then we ship them to configuration centers really close to the customer. So it's all about lead time reliability. And we configure to order. So it's based on projects. And actually, here we don't use fancy tools for S&OP. We actually have a homegrown tool which is built on the DDMRP logic that really helps us in managing this part of our channel. Of course, there's a lot of different requirements below this because you have customers like professional end users, but you also have the OEM channel, which totally from a segment and an S&OP process require a different approach. But this is one of our major supply chains, and this is an important one. But what I want to go a little bit more in depth with you about is actually the next one. That is what we call traded goods. But traded goods means for us we buy and sell. It could still mean that we buy in an ASSA ABLOY factory in Asia. So it doesn't necessarily mean for us that it is not our supply chain. But sometimes I feel that managing my own supply chain is more difficult than managing my external supply chain. And I think a lot of you recognize that. So if you go into this is Asia-driven, it's forecast heavy, you're looking about customers like the do-it-yourself chains, Amazon. This is also truly omni-channel type of operation, so we do our own web shops, we do B2B, we do D2C. In this channel, everything happens. This is where we are also forecast heavy and where we have deployed a tool like E2Open for demand planning, supply planning, inventory optimization, and the S&OP cycle. But also in that, it's really good that you understand what if you are going to your RFP, RFI, RFQ type of program. I also went to Gartner. Is that the right thing to do? No, but sometimes you have to do it because that sells your story and you need to sell your dream to the higher levels. But then, when you have chosen, also look at what type of company are we? And if I look to us, we are a traditional manufacturing. Yes, we went from mechanical to electromechanical to digital, but in the moment, we are still a classic manufacturing. So people in planning, in demand planning, in supply planning, are people that come from the shop floor. So the tool that I deploy needs to be something that those people recognize, can work with, because they will also be my ambassadors. And actually, when I started deploying this in the UK as the first pilot case, they became my ambassadors. They said, Danny, we love the tool, it's so simple to use. But that simplicity is the reason, for example, why I didn't choose one of the competitors of E2Open, is the simplicity of the tool. So it's not only about what the tool can bring you and all the fancy stuff, it's also what works best for you, for your specific company needs. Then we are in constant transformation. Because of the acquisition process, we do constant transformation. What was key for me is, and I will not go into all the details of this slide, we call this transformation Project Octopus. And why do we call it Project Octopus? An octopus has a central brain and a lot more brains and the tentacles. Within the central brain, there is the technology, there is my excellence team, and they deploy the S&OP processes and the other solutions across the board. So I first created early value to fund the program, which was key to get the buy-in from the leadership. So then we went into digitizing the supply chain, so making the solutions, the quick wins, sustainable for the longer term, including the S&OP process. And now, slowly but steadily, we go more into the service mindset, where S&OP will be designed as our tool, our enabler to support the sales growth, because there at the end is where I need the S&OP process for, is to show to the company this is a vehicle that will help us in increasing our sales. But that was for me the key to get this really embedded into the organization, to build the trust, and to also go to the next levels. Then going a little bit more in detail, for example, when deploying E2Open, we looked at the demand sensing engine, demand shaping, but then you come into a high level of complexity. And actually, we stopped using the shaping technology. The simple reason why, there are so many factors of influence. And for example, we had Hubo, which you probably all know. They had overstock, they throwed it on the market, there goes the price. So all nice, the shaping technology, but there are so many external influences that forget about it, would be my advice. Also, if I would do it all over again and select a partner, what I would do differently, I would select probably 2, maybe 3, and really go into the piloting phase with them. And not choose one and then do your pilot, but really spend the money, do the effort, because only when doing it, you will learn what the benefits, what the cons is, what resonates well into your organization. So that is really important. Also in that respect, with Amazon now, we are doing a pilot together. So we use the Amazon data, we feed that into our E2Open solution, and then look what that does for me. And it does provide benefits than getting the forecast from our salespeople, because And actually, you can now challenge it. So we are going further on the journey. We are also deploying those technologies. But also for us, it's crawl, walk, run. Start simple, then grow. We do data cleansing as we go, because data cleansing will always be a limiting factor. If you want to have it perfect, you will never start, and you will never start right. And then, like I already said, is, yeah, the blueprinting, it was a dream, but don't go there. It was for me a nightmare at the end, if I'm honest. So, yeah, just keeping it short today and wanting to go into the conversation. I want to hand over to the next person. Thank you. Thank you.
Thank you.
The green button.
Good morning, everybody. Today it's about S&OP Flavour Day. And when you think of now the different stories you have heard, I hope that the outcome is that you find your flavor on how to get your executive leadership team to sit at the same table and enjoying the meal. And I would like to present you the case of LKQ Europe. Most of you most likely have not heard of the company. It's a almost 7 billion euro company, US-based, NASDAQ listed, 26,000 people, and we operate in an Amazon-like environment. We have approximately 1.3 million SKU to manage. We have suppliers for which we are not a big fish. They rather supply to the big manufacturers. We are in the spare parts business, and we operate all across Europe, so we are the Amazon for spare parts and the largest one in Europe. And for me, 2 years ago, when I joined the company, it was just coming out of, or still in the middle of COVID in 21, getting out of the big wave, and then suddenly inflation hitting. This year, we have recession hitting. And I chose here the picture of the dice, because it very much goes in the same direction as gambling and poker. You're sitting and operating in a business where the question is, if inflation or recession is hitting the business, is our business going up or down? And you can argue exactly both ways, which are counterintuitive to each other. Our question was, what is the impact of inflation on the optimal level of inventory of spare parts? And I will come to the point where this relates to S&OP, because here you will not hear any term called S&OP, because how we tackled, or how we came to the context of S&OP is actually tackling a business problem. And this was the business problem of the minute. It's inflation, it's COVID, it's availability, it's shortage of supply, and it's recession hitting. So we have also the financial component hitting the business. So this was the question behind our S&OP process journey. And rolling the dice means, in supply, you can say, well, suppliers try to pass over the cost, and also they are getting more volatile, unreliable because of the shortages. So if prices increases higher than inventory holding, then any forward buy increases margin. So either we put something in stock or not. We are a distributor, we don't manufacture. In demand, you can also argue both ways. Will consumers buy more spare parts or not? It can be that customers are less price sensitive, they want to enjoy time. Recession is now there, but still we want to enjoy life and go for vacation, so we will consume more spare parts. On the other side, well, prices go up, people cannot afford, therefore the demand can go down. So for our business, for LKQ Europe, the S&OP process was a business-critical question to answer. And that's the context and the framing we used to position that one. It was not about enabling a technology, going for a transformation roadmap. It was, at the minute, having this question. And I called this, for me personally, an unlearning session, because I know all the textbook stuff. I worked as a management consultant. I did all of these APS implementations, and we chose here a different approach, and also, for me, one of the major unlearnings we have. The first one is, Unlearning, only market signals are capable of sensing inflationary impact. And we tried with, I would say, the top data scientists on this planet to really crack and improve the forecast. And you can see here, there is our current forecast. There is improving the forecast internally. We were just able to improve by 2%, but we weren't really capable of having any improvement out of statistical forecasting. What we used is, we used a market-driven model where we tested 26 different market signals, such as car park, inflation, purchase price index, all these kind of, I would say, macroeconomic, but also specific to the business model metrics. We could say, okay, is there a correlation to our business on SKU level? And we only found out that you're capable of significantly improving the forecast by using these market signals. So it's turning from a rolling the dice to a little bit be more forward-looking, understanding what is hitting us and how the impact is, what we should look out for. You see here, actually, the highest correlation, our proof of concept scope was with inflation. The sales of our SKUs, which were in scope, highly correlate with inflation, even pre-COVID, if you take the details. Unlearning 2 is that bullwhip monitoring is key for keeping the supply chain in sync. And this whole event is also about getting visibility and understanding on the bullwhip. This was the very first time I have seen the bullwhip for my own company. Also, as a management consultant, I have never calculated the bullwhip before. This is the one with real data from LKQ Europe. And you see, interestingly, the blue bar is the supplier volatility, the orange one, the consumer. They are, in all the cases, in every month, smaller than our internal supply chain. And that was interesting. So you see here, the green bar is always the highest one. So we have a high bullwhip amplification. I was recently reading an article from Simshi Levy where he wrote 20 years ago, well, the major cause of bullwhip, one of them is disconnected forecasts. And this is exactly what happened. And it's hitting our own supply chain, which we control. And I'm wondering myself, that's why I call it an unlearning session. If I don't monitor, if I don't calculate my bullwhip, how the heck am I supposed to know how to first keep my supply chain in sync and where to look out for in my supply chain? So I could have spent now months into improving the forecast, and still the forecast would be completely disconnected, not reaching my supply chain at all. So for us here, the major quintessence is we need to monitor that bullwhip on a constant basis and go into root cause analysis. Otherwise, it's still completely running blind, running a business, controlling supply chains in silo. So if you think for yourself, all of us learned the bullwhip effect at university, and something got lost on the way until we made it to management, that somehow we forgot about this. But I think this is an essential piece where you don't need much of technology to calculate. Even if you ask ChatGPT to come up with a formula, it's even giving you the master data from ERP as a template to use, if you want to check it out yourself. Unlearning number 3. So still, the question was, what's the impact of inflation on optimal level of inventory? Use a balanced scorecard for decision making. And that more reflects to, it's about not improving a forecast, not getting more efficient, not increasing productivity, but how the heck am I supposed, from an end-to-end perspective, find a good decision to answer that question? And we implemented a balanced scorecard approach. And I'd like to show you that one. You see here the real numbers. So you see on the left side, the first column are the balanced scorecard metrics. And you see different scenarios we were running on the executional horizon. And now think, if you would only have to take a decision on a functional level only, you would never go for gross margin, because that's what you most likely don't see in procurement. You would maybe only go for inventory holding cost or turns or cost of goods sold, but actually only by looking at it holistically, you would come up with the answer of, well, we should actually do, in our case, a forward buy, because combining what the supplier is increasing his price, it's, of course, increasing our inventory holding cost, but at the end, we have a margin impact because due to our increased forecasting accuracy, we are better able to predict demand. So that holistic view for us helped us, and also I'm missing this, and I'm looking forward to have this also in technology enabled. This is generating a decision, fact-based decision platform for executives and for operational buyers to have an end-to-end optimized decision in S&OP. So I've been rushing now through all the data, and I mentioned now a couple of vocabulary that calculating forecast accuracy, including external factors, significantly improved our forecast. It significantly is capable of keeping the supply chain in sync when monitoring the bullwhip and using the balanced scorecard for decision-making. And the question is how to get started now with that kind of discussion to not only be preaching to a supply chain community. I would like to share with you briefly this kind of visual. And this is a nice technique on how to engage your CFO, your non-supply chain nerds, into a discussion of thinking in end-to-end and thinking in supply chain performance, which is the river of demand exercise. So what you see here is basically, you see how the demand is not an Excel table or not a static view on how to see demand, but it's actually a flow. And it's, from a spare parts perspective, very clear water. That's why it's the Swiss Alps. It's at the spring. Yeah? You have very clear spring water, and it's being distorted by what? By supplier contracts, by budget constraints, by demand planner who 82% of forecasts, they are overriding it, by having not using the right signals, by not segmenting. So until we really take a procurement decision, we actually make that clear water, well, not so pure anymore as I'm used to from the Swiss lakes. So this kind of exercise, I can really highly recommend. Take your peers across your functions and just draw how a demand signal is getting distorted while it flows through your information, such as budget, such as other constraints coming from suppliers, such as bonus agreements with your key account management, etc. Highly recommended. This is driving heavily the discussion into, okay, this is business relevant. And you can see here, I've never mentioned the term S&OP, but this is all behind. This is all behind to have such a process going. And make it, this is my takeaway and my recommendation just from my learning experience, make it a business conversation, but know your tools in the back to utilize to actually improve. But drive the executive conversation on business language with the examples I wanted to share. Thank you very much.
For some S&OP purists in the crowd, the idea of flavors might make them twitchy. Purists would say there's a specific way you have to do S&OP, you need to follow these specific rules. Indeed, there's some very well-known consultants out there who I won't name drop, who say if you're not doing it this way, you're not doing S&OP. But Danny, in your journey, you were telling us about the need for localization.
Yes.
In fact, it's critical.
Yeah.
So talk to us about how you strike the balance between those elements of S&OP that are going to always be fundamentally important, and what elements you get sort of flexible on so you can localize it and make it palatable in different applications.
So first of all, it's the system behind it. I don't use the system everywhere. I look at it, where does it really add value? Sometimes I just deploy a very simple S&OP excellence toolkit where I train people and really understand what S&OP is. Yep. Go into the boardroom of that company and explain the leadership what S&OP is. But also then tweak investigate where is the true issue, like what you have done. What is the real question that we need to solve? Is it inventory health or is it service? If you know that, you actually know where to focus in your S&OP process. Because if you truly understand the process and where the problem is, then you can tweak where you want to focus. And you cannot focus on everything at the same time.
Sure.
Yeah.
So across the enterprise, do you see challenges in having a different flavor in these different applications for internal comparability?
Yes, sure, you have challenges in that. But what we try to do in everything we do is in our data lake layer, in the Power BIs that come out of it, we do harmonize. So that the look and feel, the data that comes out of it, is actually comparable. That's a journey because you need to tweak it, you need to set the parameters. But at a certain aggregated level, and I'm really talking at an aggregated level because if you go to SKU level, forget about it. But then you can actually compare. And then we use also like a scorecard model, a balanced scorecard model to really see, okay, are we moving in the right direction?
Is it as nice a balanced scorecard as Nicole's? That was a nice model.
I can learn a bit from it. We are a little less mature, but in principle, the basic foundation of the scorecard is the same.
Great.
Yeah.
Now, Nicole, I am going to name drop because you did first. Professor Simchi Levy was actually a professor of mine at Sloan, and he's the first place that I encountered bullwhip technically, beyond just the concept. Bullwhip is one of those, like you said, one of the themes of today, one of those ideas that during COVID has moved beyond supply chain into the public vernacular. I'm really interested in hearing more from you about how, on the one hand, a lot of folks in supply chain, like you, have learned about bullwhip. They know it's there. They know why it's there. They know what it does. And then when we come into a period like COVID, we all revert back to doing it. How is that something you can avoid? And is data one of those things you can use to sort of temper the emotional response that leads to bullwhip effect?
I think what we have to, it's basically a tool we can use, and I did not find another tool to better monitor. I think this is what the bullwhip effect is supposed to, the bullwhip monitor is supposed to do. It's supposed to keep my supply chain in sync and monitor and find out where is it not in sync. So what I would challenge is how do we approach these kind of problems. So let's say I just have written my blueprint and I have selected my vendor, and then they come in and they want to implement a tool, and I have a business case in the back, which is more benchmark driven in reality. But then the approach is typically I implement what I had with the replenishment strategy, what I had, and then I wonder that now I have a new tool with the same results as before. So really challenging the approach and saying, okay, let's first check maybe forecastability. Do I use the right replenishment strategy? Where is my problem by calculating the bullwhip to then find out where do I need to focus? So for example, for LKQ, for me, demand forecasting on a branch level for 1 million SKU, completely useless. But imagine we are doing this. Because somebody said, well, we need to forecast, but we need to replenish branches. Nobody has first figured out what is the right level of forecasting we should actually use. And then going into the bullwhip. And here the bullwhip is one thing which saves time. I think we don't have time for these multi-year, huge software implementations. This is over because until I figured out my mission and my vision and my technology, I'm already done, and I already have the next disruption happening. So I need to have these shortcuts, I would say, which help me, which is the bullwhip, helps me immediately to find out at LKQ I need to focus on not the availability, not the forecasting, but the internal supply chain and the synchronization of warehousing, transport, and availability. This is my major key, and I can do that at the beginning to start setting my focus. Sorry for the long answer.
No, it's a good answer.
This is how I see this as an instrument, as a shortcut to save time, but also bring business value while going into technology discussions and transformation roadmaps.
Sure. I believe it was Mike Tyson who said everyone's got a plan until they get punched in the face. And I bring that up because there's a fellow on my team who's a neuroscientist, and the reason I have a neuroscientist on my team is because we're increasingly seeing, no matter how quantitatively focused you want to be, no matter how quantifiable all of the elements of supply chain should be, ultimately it doesn't go that way because of the people involved. And he would argue, and has argued, that irrespective of how well we understand the bullwhip effect and how well we monitor it, it's always going to happen because it's not a calculated response, it's an emotional response. So my follow-up question, going back to getting punched in the face, is you've got a plan, you show the team the data, you're monitoring bullwhip effect. Are you seeing in practice a substantial mitigation of the bullwhip effect by sharing that data, or are you still seeing people sort of having those knee-jerk reactions?
It's not the kind of transformation which now is a textbook miracle thing which happened at LKQ. It's not. It's exactly what you're saying, right? So it's, I thought, I have a use case, I have my own data, I have the topic of the minute, which is executive attention. We are in the middle of a transformation, this will hit the nail, and then perfect, wow. But it was not.
Yeah.
Because of two reasons. The first one is, we are functionally oriented, and there are stakeholders who have to be managed on a functional basis. So what is really in it for each of the stakeholders?
Yes.
Second one, there is this belief, and it's a fundamentally rooted belief still, that you need to have a certain maturity in data in order to have something like this being possible. But we are not. So there was this narrative deeply rooted saying, Nicole, this is nice innovation, but let's first fix the basics. Well, which ones? I'm talking about bullwhip monitoring. So that was one of the challenges to overcome, which is deeply rooted, I think, in human belief. And the third one is to put that into a technology transformation context, which is challenging. So what we have done now, since that proof of concept, we have piloted it.
Okay.
With the software vendor. And also we wanted to pilot the approach of, this was a proof of concept, how would the system or how would that work? And the figures look like with 1,500 SKUs. And this is now bringing new challenges because a pilot suddenly means a demand planner has to fundamentally change his skill set. And I have the demand planning nerd who's capable of doing that, but what do I do with the normal planners?
Yes.
They suddenly have to deal with macroeconomic factors and models and formulas. These are normal business people coming from the business as entry-level jobs. So these are the challenges I encountered, at least, and I can openly share, because I think everybody will face similar issues or challenges which are there to overcome. So it's a transformation journey for 100%. Yeah?
Great. I have a question now for the...
I have also a question from my side.
He's the boss.
Yeah, maybe. But probably you know the case. There are two main manufacturers of painting your homes. And one of them, and of course, when we saw the COVID happening, everybody's staying at home. They want to decorate their homes and improve it. They're painting a lot, so nothing else to do. You couldn't go on holidays. So, the sales went through the roof. And, it goes on and on. And, they were both of them were very happy. But, one of them said, this will end. This can't go on. So all of a sudden, one of these manufacturing, there are two of them, and you probably know them. One of them said, okay, now we have to scale down manufacturing from 3 shifts to 2 shifts. So they were in time, looking forward. And the other one didn't. They say, sales will go on. And they now are stuck with literally warehouses full of paint. And you can paint a lot, but, everybody has already painted their homes. So basically, one of them got it right. When was it the tipping point of, the surge of sales? And the other ones, they ignored it. So my question to you is, how do you look to the outside world when there, some sales are going up, but there must be a tipping point because, trees don't go, grow into heaven. So how do you know when a tipping point has happened? And what kind of data do you use, or gut feel, or whatever?
I don't.
We had exactly the same tipping point because in COVID, everybody was doing their house. So replacing the locks and stuff like that. So our sales also quadrupled overnight. So first you need to catch up with that reality, but then like you said, you need to start looking forward and start really showing that this trend is really not a normal trend. So I went into the boardroom and say, guys, if I compare it with the previous years, if you compare it to that, this will come to an end. I actually need your help to predict when it will come to an end. And we were not fully right, but luckily also not fully wrong, because I don't think there is a right or wrong in this case. If you are aware that there is a tipping point, and you organize yourself against it, because what we did is we transformed in our supply chain more agile so that we could react faster, so that we start getting signals that the tipping point was getting there, we could actually tweak and switch off.
What kind of signals were there?
For example, as I explained, is that the UK is always for us a sort of pre-alert. We saw that on certain elements in specific groups, demand was starting to at least stabilize and even drop to a certain, and that actually was for us, we take that data and that is a leading indicator that this will happen in Europe. Yeah. And it did happen in Europe.
Nicole made reference to a statistic that I believe she got from Paul Goodwin. 82% of adjustments to statistical forecasts by humans don't add value. And that's over 4 decades of research that he and his colleagues at the University of Lancashire have made. And you might not be surprised to learn that the vast majority of those 82% of adjustments are positive adjustments. We have no problem adjusting our forecasts up. We don't love the idea of adjusting them down. And it's an important question that Martijn is asking. However, I would liken it to waiting by a roulette table and asking the guy who won that round, tell us about your strategy and how you knew it was going to hit 23 that round. He got lucky. I mean, in supply chain, we can mitigate the luck a little bit. We can get a little bit better than 50% sometimes by using outside signals, by having a lot of great insights. But at the end of the day, you're going to be wrong way more often than you're right. And just following up on Danny's comments, I think the important thing is not necessarily being able to predict when the tipping point is going to happen, because you're not going to be able to in real life, but recognizing that it will and preparing the strategy for when that happens. That's the key. Because you're going to spend a lot of time and effort being wrong at predicting the specific point, no matter how great the set of signals you have are. It's more important to recognize this is not going to happen forever, so when it does, when that point of inflection does begin, what strategy do I have in place to quickly respond and mitigate the downside?
Yeah, exactly.
And also maybe to calculate the quality of predicting that tipping point. And this is not forecast accuracy only, but actually measuring the value add of the planning department specifically. So what we have done is we have a statistical forecast, but we compared it with a moving average, just to see, are we better than doing nothing? We could also take the budget. There are companies taking the budget to compare. And then is our forecast, which is then manipulated by planners, is it adding value to it? Is it getting better or worse? And I was presenting with a company who has a full-fledged shared service center, center of excellence in planning, which LKQ does not have, right? So we are still operating very regionally. And you're sitting there with a very mature, let's say, process, company, and setup, and it has a negative value add. So there was this aha moment, which is awareness, humility, and then action.
Yes.
So even having a process on the maturity stage is great. So you have an organization with qualified people, great. And you can still completely mess up with decreasing value of manipulating. So calculating or monitoring the quality of how good are we able to forecast that tipping point, I would add.
I believe we're a few minutes over time now. Do we
Yes,
have time
yes.
for one more question to the two of them?
Quick one.
All right, so a lot of what we discussed so far this morning came from two organizations who have potentially a lot more resource and capacity available than some of the teams represented in the room. So for those organizations that don't have the kind of scale that either of you do, what key takeaways would you leave for the smaller organizations as the essential element of beginning to find value with an S&OP process? Either one of you can jump in.
Is really look at what is your specific problem that you want to solve with the S&OP, and really focus on that. Don't believe that the system will do miracles for you. It will not. It's maybe 20% of your solution. So
well, that's generous, I think.
yeah, yeah, exactly. Maybe I'm generous even, but there are some providers in the room, so let's be careful.
Fair.
Yeah. So that are the key things that you need to look at as well, and what type of business are you? What type of people do your planning? Are you a bit more sophisticated or a bit more classical? And make sure you tailor for that. And make sure, of course, at the end, S&OP is also a boardroom thing.
My takeaway is don't get overwhelmed by all these Top Gartner 25 reports and presentation. I was already overwhelmed when you mentioned data lake, so we could not even start because we don't have one. So we did that proof of concept with sales invoice data because we don't have sales history on more than 6 months.
Wow.
So sales invoices, you would say, nah, not really the most mature stuff. And still, you can have a significant improvement. So get started, no matter what. Don't look at that McKinsey slide, which says your data maturity, and once you're on step number 5, you can actually be the top 25 Gartner company. No, get started, and you will see that you will have an improvement. Because what's your other choice? Just then going to a conference and listening to whatever kind of miracles they have already done, yeah. But get started. Otherwise, you never have an improvement. So
yeah. Great advice. Yeah. Yeah.
So I would like to thank the panel for this insight. Thanks.
Thank you.